This is one of my favorite videos to make, which is effectively analyzing the prior year and forecasting the biggest trends and predictions for 2026. Look, we all know 2025 was a disaster of a year. Complete obliteration for altcoins, mixed with some of the best news we could ever have as an industry. The dissonance between the news and the bags was absolutely insane. And as you guys know from my last video, yeah, it sucked for me personally. 2025 was like a year where you think you're getting set up on a date with your dream girl, and you show up and it's like Gorlock the Destroyer or whatever her name is. And yes, she's stunning, she's beautiful, she's a perfect woman, but maybe she's not your type. And then she beats you to death with a crowbar and you bleed everywhere, and then she like exposes your internet history, something like that. But that was 2025. That was last year. It's this year now. It's a new year. It's a beautiful new year. And today we're going to be jumping into everything. And now that we've had a few days after the new year to see how the markets are behaving, I'm really excited by what we're seeing. So we're going to be covering everything from macro to geopolitics, equities, metals, crypto, and culture. But of course, we're going to be spending a lot of time on the crypto prediction. So make sure you have some hydration, a little snacky poo, because this one is going to be long, but it's going to be worth your time. I am so happy to have 2025 over. Let's get this started. First and foremost, let's talk big picture, the macro. This is going to be the biggest theme of the year, and that is quite simply that liquidity is coming. As you can see, this is the federal balance sheet for the United States government. We'll just get rid of everything on the side here so you can see this. For the last 4 years, we've pretty much seen a full destruction, a downtrend of this Federal Reserve balance sheet. And for the first time, you can see here, we are seeing the reinflation of the balance sheet. This is something that we didn't see except for this period here, which was the Silicon Valley Bank bailout. And Silvergate, there was a few of those banks in early 2023 that needed bailing out. And so the emergency injected some liquidity. But aside from this little moment of crisis, which did pump the bag significantly, if you remember, we haven't seen a rise in liquidity on the federal balance sheet since it ended right here at the very beginning of 2022. That was 4 years ago. We are getting old, which is why we really need to lock in this year, okay? Lock in, boys, lock in. Liquidity is coming, and it's coming in a big way, and that is going to be the big theme of 2026. We also know that a lot more spending is coming, and just take a look at this Polymarket odds chart showing that effectively we have a 34% chance of a Democratic sweep and a 47% chance of the Democrats at least holding the House, which means that the overwhelming odds are that the Democrats will at least take the House, if not more. Big Donnie is not going to like that, and we can assume he's going to do everything in his power to bring Red Team back into favor, even if it means spending us back into an inflationary spiral. One thing I don't think people get is how big the drop on the US dollar versus other currencies was. Here you can see at its peak about 12.6%, which means, of course, that just because the stock market went up about 20% doesn't mean you made 20%. Truly, you only made maybe about 4% versus just putting your cash elsewhere, which is again why the great performance of the stock market in a year where the US dollar went down so much is a bit of an illusion. But that gets to my other point, which is you don't want to be too cash heavy here. You want some cash to buy the dip on things like Bitcoin and the key sectors that I believe are going to be asymmetric in 2026. But I don't think this is the time to become a doomer, because remember, they can just print more money, pay off old bills, and keep the whole wheel spinning. And if you don't think the game is sort of rigged to go up by now, then you're just really not watching the right movie. Now, from a macro standpoint, you also want to be understanding that capitalism is no longer super free market stuff. We're seeing very specifically government-directed capitalism, and that is a macro theme right now. Great examples of this were the CHIPS Act that happened a few years ago, and then you saw NVIDIA, AMD, and all the chips companies go absolutely nuclear along with the AI trade. But let's be honest, there was literally a congressional bill, the CHIPS Act, and they were telling you what they were doing with the money. All you had to do was set up shop next to the money printer and collect. Well, it may surprise you to know that they're doing this over and over again. And so understanding where the government is awarding huge amounts of funding and where they're spending their money is not a bad place to be placing your own bets, understanding that they are actually directing capitalism much more than they have in prior eras. Good examples of this were the CHIPS Act, like I mentioned. We also have the AI backstop, which David Sachs talked about just a few weeks ago, where effectively the government will become a customer for AI data centers, removing a lot of risk with the AI build out. As I just showed on screen, they're very concerned with uranium, so maybe it's not such a bad idea to invest around that theme. You might have noticed that Trump pretty much took over Venezuela just last week, and in doing so, the Venezuelan stock market went up astronomically almost overnight, and we've seen similar things happen along with the decriminalization of marijuana. marijuana, which has led to the explosion of pot stocks. Pretty much the lesson here is from a macro standpoint, understanding that capitalism is being semi-directed by the government in a way that is fairly new, but would behoove you to bet with the trend, bet with the government and not against the government. Those are macro themes. And it's important you realize that Bitcoin and cryptocurrency are high national priorities as well, along with, of course, Somalian daycares. I kid, but wow, what a video. Now let's talk about equities. As you know, of course, the US has been in an AI bubble. Well, it might surprise you to know that actually the AI bubble was outperformed by emerging markets. That's right. Non-US markets actually outperformed US markets and the Mag 7 last year. But most people were just talking about how AI is a bubble. What's even crazier is if you see this emerging markets ETF, the EEM ticker, you can see that it's on the verge of breaking out of what has been a 20-year cup and handle in the making here. And not exactly a clean cup. You can see that it's breaking through a level that it's been trying to get through since 2007. Now, I highly recommend you read this piece by Ray Dalio where he summarizes 2025, but I'll pull out some absolute gems for you, where effectively he talks about how US stocks are dramatically underperforming non-US stocks as well as gold and other metals. Of course, silver has been going crazy. He believes that 4.7% growth over the long term is what he'd expect for major equities, aka terrible and not even getting you anywhere close to what you're losing to inflation as well as currency debasement and really the US dollar going down. It's a mess. 4.7% is not enough. You can get a risk-free government bond for a little bit less than that, and you don't even have any chance of losing value in your underlying assets. Pretty much he's saying the juice isn't really worth the squeeze here. That's Ray Dalio, you know, the guy who built the world's biggest hedge fund. And that's why I'm focusing on more asymmetric setups such as the IWM or the Russell 2000, which are these smaller cap stocks, which have not performed nearly as well as those Mag 7 names. You can see here that they are also fixing to break out from a massive top formed back in 2021. I believe that equities will see more value distributed among smaller stocks as well as emerging markets than those traditional shiny Mag 7 names that have dominated the trade during this tough monetary policy under the Fed's quantitative tightening. Now, I will say this does fly a little bit contrary to my original thought that you want to invest next to the government priorities. They have made AI a priority, but still this trade can be stretched. It doesn't mean that they're going to pump your bags ad infinitum. It just means that, hey, they might not let the trade fall apart, but it doesn't mean it's going to be the best performing asset class. And for that reason, I'm looking at other stuff. For example, space stocks. That's right. Space stocks have been going absolutely crazy. Just look at Rocket Lab here since about April in the bottom of the Trump sort of tariff fiasco. You can see that this one is up a whopping 24x, absolutely going crazy here. And as beta to Rocket Lab, RKLB, I'm heavily positioning in Lunar, which is Intuitive Machines, another space stock here. And you can see that there was this bear market line of about $13 that it's been under really since about May of 2023. And it's been curling and now has started to break upward through this overhead resistance that had kept it down so many times over the last few years. This is a very constructive breakout and one that I'm excited to see progress through the new year. Of course, all of the space stock hype is because we have the SpaceX IPO coming, probably some point this year, and it will lift up the entire space stock sector, along with Tesla, which is also part of our other sector we're looking at, which is the EV sector. Elon Musk has hinted that Tesla holders will get some kind of benefit during the SpaceX IPO, which he still did to go live at $1.5 trillion valuation, easily the largest IPO in history. And of course, it's bringing things like Rocket Lab and Intuitive Machines along with it. As always, Tesla is and remains and will continue to be one of the most important companies in the world. I believe that they will not only ride the hype here of the SpaceX IPO, but I think that they have a lot to look forward to, especially as they are one of the best plays to get into my favorite niche outside of crypto, which is very hard to invest into, which is robotics. Tesla is by far the easiest robotics play along with Google to invest into. And I know I said I was going to do Mag 7 stuff, but again, Tesla is definitely something I still have on my list of favorite assets this year. The last trade I'll talk about before the fun crypto stuff is this, which is, of course, Rivian. Now, you probably remember Rivian as that random Tesla competitor from back in the day. You may have seen a couple of cars on the road if you live in a big city like LA. I certainly have. Yeah, Rivian has been in a 4-year downtrend pretty much since the peak in 2021. It's gone all the way down. It bottomed here in April of 2024 and has actually put in a really nice ascending pattern until it's finally broken this extremely tough overhead resistance around $19. And you can see it's retesting it now. If it holds this line, it should continue up and have a really nice year. It's a trade I got long on some calls, not too different from the prices that we see today. I have some $20 strikes and more. I'll talk a little bit more about that trade on a different video, but I do think Rivian is an exciting trade for 2025. And even though people have pointed out that it's not a super profitable company, the chart is eerily reminiscent of Robinhood back in 2024, when it had this huge downtrend starting from 2021. It was able to put in this bottom reverse, and we all know how that story ended. Robinhood was one of the greatest performing stocks that we've seen in the past sort of 5 years or so, going from a low of $6 up to a high of 150. I mean, it's the stock market version of Solana, pretty much. Now, finally, of course, I mentioned that the government has decriminalized weed and the weed stock world is popping off. I'm going to do a little bit of diving into that. It's not going to be a huge part of my analysis or investment, but it's just something that we can use as an example of why understanding how things change in society constantly presents new opportunities. There's not just one trade. There's many ways to take the same thought process and the same lens of viewing government-directed capitalism as a way to make outsized returns. Now, before we get to crypto, we're going to switch into metals, which has been the craziest topic of the last few months. Now, metals are usually boring. They are not boring, which means one of two things. Either things are really about to get crazy, and that's a distinct possibility, or this metals run is kind of near the end of its current leg. Maybe not the end of its final leg, but usually things don't get this exciting in metals for very long. That being said, the charts look kind of kooky. Here you can see what I'm actually charting is silver charted against the S&P 500, which you can see topped here in August of 2011 and went on pretty much a 12 or 13-year downtrend before curling and decisively breaking back up, which is a very long, very, very hotly anticipated by maybe some geriatric audience here, rebound here, a revenge arc. And as you can see, it's run up against this trend line, which only has really 2 points of contact. You can see that this has been going down sort of structurally since the 1970s, 1979. You can see here almost 50 years in the making, you have this trend here. So we might see that this is a local top, but we also need to be aware that if silver is able to bust through here and start building some structure above, that we could be looking at it running back to this level or potentially this level over the long term. That is a huge change in behavior to the tune of 270% more gains than the S&P 500, or if it hits the top end of the range, up to 40x. That's right, 40x the performance in silver if it's able to run it back versus the S&P 500. I mean, you guys have also seen gold. It's got the chart that we wanted our beloved Bitcoin to have. And even though it looks pretty blow off toppy, I also want to show what gold looks like against the S&P 500, because it's actually just trying to break through this resistance where if it just does the same thing silver did and it gets up and it touches this trend line, it still has another 31% better performance than the S&P 500 if it's able to pull this off. Again, in this new era where there's inflation and distrust amongst nations and the geopolitical landscape is shifting so aggressively, the move away from the dollar is one that's not just as simple as a story of money printing or a story of economic changes. It's also a geopolitical change that we have to acknowledge started with the Russia-Ukraine war and now has accelerated with things like Venezuela, Israel, Iran, the tensions with China. These are reasons that governments are starting to stockpile gold and go for neutral assets that not one country can truly control. And just for posterity, we'll just show you, this is the German value of gold back in the 1920s when they had the Weimar Republic hyperinflation, where the cost of 1 gold ounce in the Deutschmark and the German mark went from about a single German mark up to 1 billion. So gold might feel very sleepy and lazy, but there has been precedent that in the past, it can be the currency debasement hedge. Now, of course, I'm a big believer that the future is digital. And that's why I believe that this chart I'm about to show you is even more important. Here you can see Bitcoin versus gold on the 1-month chart. And I think it's important to realize that if Bitcoin goes up just a little bit, I believe that this will count as a macro higher low hold here, where we've seen higher highs and higher lows against gold on the long-term monthly chart. Again, the future is digital. We know that. We know that actually storing, transporting, selling, verifying gold is very difficult to do. We know Bitcoin is the future of a sovereign store of value. So to me, it's really a question of when the rotation to Bitcoin and the outperformance by Bitcoin happens. And I think the understanding that gold isn't done with its bull run yet might explain why the rotation into Bitcoin has been a bit sluggish. Now, finally, I want to point out that the copper versus gold ratio, which is shown on this yellow line at the bottom, is actually an expression when it gets to the lows and starts moving up. That's usually when Bitcoin actually has its big moves. So you can see here that Bitcoin's entire last 3 years or so has been happening while copper has been losing value to gold, which is not typically when Bitcoin pumps the hardest. You can see that it is touching this bottom trend line and should, over the next few weeks, form a bottom here if history is any guide. Once copper starts normalizing against gold and going back up, that's typically a sign that the economy is booming and that risk will flow into smaller assets, more risky assets, and specifically Bitcoin and crypto. And when that happens, along with the ISM breaking out and the small caps breaking out, those are usually the key ingredients that have not been present for a true crypto bull run. And I believe if those ingredients are present, we will see our coins do way better than they have in the past. Now, one of the reasons that the silver chart looks as insane as this is that there is truly a shortage of silver, as it's the most important metal to create solar energy, which has become the cheapest form of energy over recent years, and in the future will become by far the cheapest source of energy. Now, the thing about it is China is monopolizing the supply of silver. There's actually a global shortage of silver due to the AI data center build out and the need for increasingly vast amounts of energy to power these data centers. And for that reason, there is a big belief that silver is an extremely short supply and needs to be hoarded. But it's also worth knowing that copper can be substituted out for silver over the long term. It's going to be expensive and take a long time, but if silver gets too expensive, the energy industry will focus on using a cheaper metal like copper. And so copper could become a play if there is a shift away from using silver for solar energy. Just a little bit of inside baseball. If you're not following the metals trade, I found it very fascinating over the last few weeks and months to be digging into these topics. But now, alas, you have made it through all the other topics that I want to talk about in my evolution as an analyst. Okay, yes, EllioTrades. You got to talk about a bunch of other stuff besides your altcoins being down.
But now it's time to talk about crypto.
So without further ado, let's talk about my 2026 predictions for cryptocurrency. First and foremost, I believe we will get our Clarity Act, our market structure bill. Now, I want you to remember, this is the most important bill that we have ever seen in crypto. The Stablecoin Act was like a little appetizer. This is the main dish. This is the thing that says it's legal to build crypto products, to operate crypto networks. We're not going to get a new Gary Gensler 2.0 and start locking up everyone who published a few lines of crypto code. We're not going back to the dark ages. And once that happens, we'll see terra firma, bright line rules, and we'll see the biggest entities and companies on earth build with confidence in blockchain. We have not seen that yet, and that's why this Clarity Bill is such a big deal, and I believe it happens in 2026. I believe the SEC will go even further to provide clarity for crypto developers and helping push even more things on chain, and I believe that that will lead to equity tokens becoming commonly traded across all blockchains and in almost all venues. From a price standpoint, I believe Bitcoin will not only reclaim 100,000, but at some point in 2026 will break 140,000. How high it eventually goes, I don't know, but that is my bull case for 2026. Of course, I'm here to provide validations as well. And the invalidation is that if we are below this prior level of 74K, in Q3, that is the third quarter of the year, and it hasn't happened yet, I believe that that prediction is null and void. I don't believe we will go from 50K or below to 140K in one quarter. However, I do believe that it is totally possible and likely, if liquidity starts hitting the tape, that Bitcoin could not only reclaim 100K, but could make new highs in 2026, thus invalidating the mythological 4-year cycle and showing that liquidity, business cycles, and really the entire world's functioning is much more important for a macro asset like Bitcoin than a mythological 4-year calendar. I think it would be the best thing possible for crypto to break from this astrological madness. I also believe that Bitcoin dominance will move structurally lower. That's right. I believe that we will end the year at below the levels that we currently are at for Bitcoin dominance. And I personally believe that we will at least test this 54% Bitcoin dominance, if not go lower in 2026. And all this with a rising price of Bitcoin, which you know what that means, bullish for our beloved altcoins. Next, I believe 2026 will be the year of the enterprise blockchain, but not in the way you think. I think that you're going to see a flood of these. We're already seeing them. Circle's blockchain, Stripe's blockchain, Wells Fargo blockchain, JP Morgan blockchain, every Tom, Dick, and Harry, everybody's going to have a blockchain. And there's going to be all this hype that all these open source blockchains are going to fail versus these private enterprise blockchains. But It might not surprise you to know that this has actually happened before, and I believe that these attempts will fail, and you will see capitulation from the big payment processors, banks, and financial institutions, and they will all start building on open networks like Ethereum and Solana, and we will eventually see that open and decentralized finance is truly the innovation that powers and makes crypto so special, and that there is no fighting the leaders in this category, Bitcoin, Ethereum, and Sol. I believe that the enterprise blockchain fad will be a massive failure, though it will monopolize a lot of headlines, and try not to get too distracted. Now, for my next prediction, I'm sure you guys remember Zcash exploding. Monero has been a little bit quieter, but almost just as incredible. And you're seeing announcements like this, which is from A16Z Crypto, about privacy trends for 2026. In my opinion, privacy is one of the most unique things that you can do only in crypto. Truly anonymous, encrypted money that nobody can track and nobody can spy on is something that does not exist outside of crypto. Same with Bitcoin, a sovereign store of value that solved the double spend problem, that's verifiable, that you know is provably scarce. Ethereum, truly decentralized open finance. Anyway, you get it. I'm not going to go through all the use cases, but privacy is most certainly one of the most unique things that you can do only in crypto. If you're going to say, okay, well, this stuff doesn't need a token, this stuff doesn't need a token, that's what everybody likes to say about everything in crypto right now. But the truth is that privacy does need a token. And I believe that privacy features will start to be added to all kinds of blockchains, as well as native privacy coins will be a hot trend for 2026. I'm not going to make any price predictions, but I do think things like Zcash and Monero are probably going to be the biggest beneficiaries. And those are my bets in the privacy sector, though I do think privacy in general is going to be something that finally is getting the love it deserves in crypto. And honestly, feels pretty good because nobody needs their financial data out there public for everyone to see. Now, finally, let's talk about stablecoins. Just kidding. No one cares. I don't care. You don't care. Moving on. Okay. Equity perps. Equity perps have become a really hot thing because guess what? Equities always go up. Stocks always go up. And that means they're easier to use leverage on. They're easier to predictably trade. And my friends, equity perps are only going to keep growing. Although I do think the perp dex explosion and mania will subside. There's too many competitors. And really, it's going to be Hyperliquid, Aster, Lighter, maybe a few of these. But there's not going to be 50 big perp dexes. There's going to be a couple of leaders. And the other ones will not get the same buzz. And certainly not the same unicorn-like explosive deca-billion-dollar valuations you're seeing with the likes of Hyperliquid. Finally, I believe that prediction markets will settle down. Obviously, Polymarket and Kalshi have all this money from raising huge, multi-billion, and in the case of Polymarket, over $10 billion valuation rounds. So they have so much cash, they don't know what to do. It's spewing out of their eyeballs, and they're spending it wherever they can get visibility. That's going to settle down as they start to spend through that raise, and quite frankly, people just don't care that much. But what is going to happen is the sports betting platforms that are getting destroyed by Polymarket and Kalshi are going to wage a massive legal battle. I believe that legal battle will make its way all the way to the Supreme Court. And I also believe that nothing will happen. Probably that case won't be seen until 2027, but I do believe that these prediction markets are too well networked with the government, with other sources of funding, and I don't think they're going to be defeated. I think they will be victorious, but that will be a big story, and I don't think prediction markets are going to be the place to make generational wealth. I think it'll be found by simply following the mega trends of today. Next, I believe that everything apps like Robinhood and Coinbase, they're all going to be converging amongst the same design space. Coinbase is trying to become an equities trading, perps trading, prediction markets, all in one platform. Same with Robinhood and same with pretty much every major bank, Charles Schwab, you name it. Everyone is trying to do the same thing. And I don't believe anyone's going to do it particularly well. I'm bearish on everything apps. And so 2026, I would say fade these everything app narratives. I don't think it's going to work. Here's the narratives I am excited about for 2026. We've already talked about privacy, but the area that I think is going to be really interesting is low risk DeFi, the kind of DeFi you can just farm yield from in ways that give you just more yield than you can get in the TradFi system. Low risk, long-term DeFi farming, whether it's through borrow lend, through V33 dexes, through different forms of DeFi yield, I believe that's where you're going to see massive adoption and just a continued growth arc that is going to be extremely good for DeFi. That's something I'm extremely bullish about. However, of course, when things get crazy, you're going to look to the more speculative areas like memes and AI tokens for those speculative pumpy gains. Once crypto is no longer so bad and everyone's bullish again, those of course will pump again. Yes, 2026 will have a big meme season. I don't care what anybody says. No, you shouldn't get back in the trenches. But I do think you'll see some pretty convincing pumps out of things like Pepe and those other big memes. No, I'm not bearish on crypto. No, I don't think that the market needs some magical way to cure itself to go up. And yes, I do think that increasingly people want to bet on things like crypto, like meme coins, like gaming coins, like DeFi. And the only reason they don't like this stuff right now is because the price has gone down too much. Once the price starts going back up, they will love it again, just like they loved it the last few times. The thing is that other sectors have been booming, and so people have focused their attention there. One of the areas that people have been absolutely shoveling their money has been Pokemon cards and more recently One Piece cards. I'm going to be doing an episode with Cold Blooded Schiller here. We'll talk more about it, but I think it's really important you realize there's too much money out there. Cash is actually very common. It's everywhere, and people are putting it in places that are more scarce. And so that's manifesting in things like the AI trade. It's also manifesting in things like gold and silver. It's manifesting in things like Pokemon cards and things like One Piece cards. And for that reason, it's important that we track important places where scarcity exists. And yes, I will be investing small amount, but I will be doing this with you publicly, investing in some Pokemon and One Piece cards to play along with what is an obvious and massively important cultural movement that also has a way to trade. Kind of feels like what NFTs wanted to be the whole time. But in this case, you actually get something physical as well. But I'll leave you with this. 2026 is going to see an acceleration of the trends that have gotten us here. People feel isolated. Increasingly, they feel economically desperate. They are not having sex. They are not having fun. They are not getting their minds off this. They feel trapped in a prison of mediocrity, and they will look for ways to make it. And for that reason, I believe that finance and entertainment, or really sort of gambling to make it, and entertainment will become permanently infused. This journey to break free of this sort of financial prison that people feel is ruining their life is going to be a driving force of not just 2026, but probably the rest of the decade and beyond. We know that wealth inequality is a huge topic, and everybody who's in the lower bucket wants to be at the top of the K-shaped economy. I believe that hyper-gamblification and financial entertainment are going to be massively explosive trends, and I'm trying to deliver the best content I can to captivate an audience here in 2026. And hopefully we can all make it together in this wild new world of investing and finance. This video has gone on way too long, so I hope you enjoyed it. If you did, make sure to smash up that like button and of course, subscribe to the channel. We have a bunch of amazing shows coming for you in 2026. As always, if you enjoyed this video, make sure to click on this one popping up right now, and I will see you very soon on the next episode.